You talk about if volatility picks up, it might be good for banks, but it depends on whether it's good volatility or bad volatility.
Yeah, and right now we have relatively illiquid situations where client engagement is pulling back. Recently, Goldman Sachs was stuck with stock in Intesa Sanpaolo, an Italian bank that they were trying to place. Deutsche Bank and Citibank got stuck with Osram stock that they were trying to place. We saw a leveraged buyout deal that Goldman was trying to do become a hung deal. So we're seeing illiquidity in the markets that makes the risk taking, and these guys are taking more risk in their prop books right now. And they're not they're taking more risk in their prop books right now, and at a time where illiquidity is building.
Did you catch that? I hope we caught that half a sentence. I'm not going to make you finish it. I do want to ask you, though, more a little bit about collateral and how that's deteriorating as well in quality, and what does that forebode?
Yeah, I mean, we're seeing one-offs. Autos is the obvious example of where you're seeing collateral values deteriorate. In fact, J.P. Morgan today acknowledged that they took a special $50 million write-off in autos that was regulatory induced related to their delinquencies. What's tough is third quarter seasonally is an improvement in credit, and you did see that seasonal improvement, but the secular trends is what is changing.
Which of the big five, then, Charles, is in the best shape? I mean, Goldman Sachs is neutral. All the others have a sell. I suppose that tells us you prefer Goldman Sachs. Why does it stand out?
Well, what I've said about these big banks is this time around, if we go into a down cycle, I think they're going to come out of that down cycle much, much better than they have in the previous three cycles. Their balance sheets have been repaired. Their liquidity is strong. Their capital is strong. They've de-risked. What I'm talking about is what I call an earnings recession. And I think we're looking at an earnings recession in 18-19 for the big banks.